Hello.
Hello.
Can you hear us? Kun Kiattisak?
Yes, I can hear you.
Good afternoon,
Okay.
Krab. Yes, Kun Kiattisak, the stocks have been rising quite significantly now due to China's manufacturing resilience from slowdown yesterday. So how is the overall health of Asia stocks at the start of February?
I think momentum is still looking pretty strong, better than expected, or rather I'll call it not as bad. Economic data partly contributed to this better market sentiment overall. But I would also like to highlight that last year was actually a pretty bad year for global equity markets. The Thai market was flat, but then for the rest of the world, it's actually pretty strong on a relative basis because we're actually one of the best performing markets being flat. If you look at markets in Europe, North Asia, or South Asia, we saw the indices decline in the region of 10 to 30%. So in other words, I think equity markets are coming off pretty depressed levels. Therefore, they're more receptive to any signs of positive economic data.
I see.
Right. Kun Kiattisak, how have the external effects of the Iran oil sanction and the Europe debt crisis moved the equities for 2012?
I think maybe somewhat surprisingly, but Iran actually didn't have that big of an impact on the markets other than the initial spike in oil prices that we saw in late December, early January, which lasted for only 1 or 2 weeks. Oil prices actually came off since. So in a sense, I think the market is not factoring a very negative outcome. But then if you look at the magnitude of potential oil supply disruption, it's actually quite significant. We're dealing with 1/5 of global oil supply. Now, in the case of Europe, it's quite the opposite. The European debt crisis was really one of the main reasons that dragged global equity markets off its peak in around about third quarter last year. And I believe this is why you're seeing a rebound in global equity markets because the market has already factored in a pretty negative scenario. But just to summarize, if you look at the whole of 2012, I think Iran and Euro will still be major factors that will contribute to big swings or volatility in equity markets.
Yes, and also, are we counting that the coming U.S. QE3 is going to happen? And if it does, what are the likely expectations of investment back home?
Well, I think if you look at the economic data in the U.S., be it the GDP numbers, the manufacturing index, the housing industry, unemployment or inflation, they're all looking better. But this recovery so far, or stabilization, still looks pretty fragile. So I think you can't totally rule out QE3. In fact, I think it's quite likely that you will see it again. But I think the magnitude of QE3 will be smaller than QE1 and 2, and it's quite possible that it will be targeted at just the mortgage market. But in terms of the impact back home, additional liquidity is usually positive equity markets.
I see.
Right. And Kun Kiattisak, back to Thailand, what are the updates can you share on the set index, and does the transfer of the Tom Yam Goong debt to the BOT rattle any market positive or negative sentiment?
Well, I think the set index or the Thai stock market as a whole looks to be in pretty good shape. I think part of the reason is if you look at last year, we're actually pretty resilient, and a large part of that has to do with the global crisis that you're seeing everywhere around the world is largely due to debt, and this is one problem that we don't really have, and this is probably the lesson we've learned from the Tom Yam Goong crisis. In terms of the transfer of the FIDF debt, it didn't seem to have a very big impact on the market as a whole, other than the banking sector directly. They've underperformed the first 2 weeks of the year, but actually since then they've caught up along with the big market. They're still a bit of a laggard, but overall the market hasn't been severely impacted by this.
I see, Kun Kiattisak. So this point in time, starting of 2012, and with the imminent government spending on flood-related projects, which stocks, in your opinion, are attractive?
Well, we actually didn't play the flood protection projects very strongly. On the contrary, our strategy for the first quarter has focused on the energy names, which were the big underperformance last year. And this would include Thai Oil, Banpu, and PTT. Fortunately, these calls have worked out well so far, but we think there's still upside in these stocks for the rest of the quarter. Now, if you're looking at shorter term on a month-on-month basis, our strategy team put out a note, which is strategy for February, and then we recommended that investors should look at the dividend plays as well, just ahead of the earnings seasons. And the 2 stocks we picked for dividends would be AIS and Delta.
All right. Thank you so much for joining us today, Kun Kiattisak.
Thank you very much.